All right, so today is Monday, March 23rd, and I took no trades today. I wanted to explain why. There was one big reason that really had me sidelined on the charts, and unless I saw something absolutely textbook perfect that I was 1000% confident in, I wasn't interested in putting up risk today. And the reason for that is what you see here on the screen, which reads the market will always give you opportunity, but not all opportunities are equal. And I found this to be so true. And in my trading and in my back testing, our model that we use has a certain win rate, right? Call it whatever it is, 55%, 60%. Our ability to read price, the draw on liquidity, and the narrative has a certain accuracy rate. Like for me, I can just use my numbers, I guess. About 70% of the time, I hit the draw on liquidity right. Um, and so you start factoring these things together, and then you get a win rate. However, a third thing that many do not factor in is market conditions. Because in certain market conditions, your model can have an 80% win rate. In that exact same model in different market conditions or a market regime can have a 30% win rate. And sometimes this is hard to identify and see in your real-time live trading. But when you do a ton of back testing and you start evaluating the data, it becomes perfectly obvious because I have years of data doing back testing. And I'll see these periods of time where I change nothing, but my model just isn't working. And then there's periods of time where my model is working. And those two offset each other. And at some point you have like a win rate combining those two things. Now, my point here is that there are clues that the market gives us to tell us that our model is going to have a lower win rate that day or that week or whatever. And today was a perfect example of one of those clues. Now, so let's take a look at the chart here. And I'm guessing maybe you can see what I'm even referring to is I know some people are calling them Trump tweet candles or whatever. Ultimately, what happened this morning is we got this move at 7:05 a.m. that ran up 3,400 ticks or 870 handles pre-market. So this was when Trump announced some positive news with Iran. Now, one thing we need to understand about the markets is there are as ICT taught us, when after a market expands, the one thing it's going to probably do is consolidate. And for me in my model, I know that when it's consolidating, the win rate drops. So knowing that, when I woke up this morning, this blue line here is 9:30. Um, I just saw this candle and I'm like, oh, I am so likely not going to take a trade here today on NQ. And what do we end up seeing? Well, the whole AM session, which goes from 9:30 here till somewhere, depending on where you cut off. I cut off at 11:10. That's my cutoff window. For me, I found statistically my win rate drops after 11:10 in the morning. So right there. And what did the market do? We have to zoom in and see these candles because that's such a big move that happened. But ultimately, nothing. The market opened up and it was just some lower time frame, high resistance liquidity runs. It just kind of floated upward, took buy side, and then floated down, and then decided to come down again. Now, one thing I want to point out here, like what I was expecting for price today, and what I would have been slightly interested in, is if price had come back down into this 1 hour fair value gap right in here, this fair value gap. There's some on the 15-minute too. But ultimately, I wanted to see price come back down into that fair value gap and make some sort of bullish move out of there. And that did happen during the lunch session. I do trade lunch from 12:20 to 1:10. And what we can see down in here, and this is where I was looking at this tap into this gap. We had an SMT. We had an inversion. I did not take this. I was slightly disinterested in price, and then this gap was a little bit small. So the fact that we had abnormal conditions in terms of volatility this morning, right here, coupled with a borderline B setup, meant I didn't take it. And, in this case, it would have been a partial winner. I would have targeted 2.5R probably. Well, not probably, I would have. Oh, it would have been a full winner. So that's cool. But ultimately, this was one of the setups that won. And this is a lower probability today, so maybe call it a 40% win rate. And it just was one of the ones that worked, but I don't want to have let FOMO creep in and decide that because there's a model, I should take it today. For me, it needed to be absolutely A plus and absolutely clear. And even then, this might not have been perfectly clear. It's not a nice deep dig into the consequent encroachment of this fair value gap. So I opted not to take this trade, even though it was a winner. And now that is one of the hardest things for us traders, I believe, is the idea that, our model appears and we shouldn't take it because there's a degree of discernment that keeps us out of trouble. And this is the patience part of trading, and this is perfecting our craft. Perfecting our craft is knowing when not to take a trade. And I can even show this in terms of like my current live trading results. This is the account. We can see how little I've traded. No trades this whole week. I think I took a trade on Monday on a different account, actually. Then we can see I've just been selective in my trading, and it's produced positive results for me this month so far. But where this stems from and why I have, I guess, so much discipline when it comes to not taking trades if I'm not certain, if market conditions are not ideal, is I've obviously, in my live trading, it's it's much harder to see the patterns because I'll struggle for a month and I'll step back and then I'll do good for a month. But in backtesting, I'm now almost completed 2 full years of backtesting, and the pattern is absolutely clear. So if we look at here's 2024 that we're looking at, and then you can see down in here, there's one more. I think you can't see that's a green month down below my head. Yeah, or you can see it right there's a 10K month. Is look at this consistency in these in producing profitability these months, and this was also true in my 2025 backtesting session. Very similar results, but we can see how infrequently I personally take trades. Some days I get a couple trades in, like right here, here's 2 trades. Other days I get in no trades. And what I found is when I looked back and I counted the days that I was trading, typically 50% of the days are no trade days for me. And once I understood that statistic, that idea that I can, because in real time, this feels so slow. Like imagine this 2-week period here, where I took 1 trade over the course of 5 days in this week, and then 0 trades over the course of 5 days in this week. That took me, 30 minutes, an hour to back test those 2 weeks, let's say, maybe less even. And so you don't really feel the emotions and the pain and the difficulty of having to wait and be so patient in back testing. But when I see this pattern over and over again in my back testing, it's really reinforcing for me how my live trading should present itself. Because my live trading, when I compared it to my back testing, it didn't look the same. I definitely took a lot more trades live than I did back testing. So here for me is proof that when it comes to profitable trading, now obviously this does not include other things that live trading includes because this is a back testing session, of course. But what it takes away from it, what I can take away from these sessions, is how no trading is a good thing. And to have I guess what I'm trying to say is a standard and an expectation for myself to know that I can go a week without taking a trade and it's going to be fine. Some of these months, if we look at them, like here, look at all this time between trades. So this was a $10,000 month, and I traded probably less than around half the days. And it just blew my mind. Here was a month where and then there are some months where you do trade a little bit more, so it averages out. But nonetheless, just having that expectation set forth that I'm looking for, an A grade setup, and that I don't have to take a trade every day, and that has been keeping me out of a lot of trouble. So I just wanted to share that little bit. And there are a few other clues that I look for and conditions that I have in my rule set that tell me at the very least to be cautious, and I'm allowed not to take trades that day. And again, this is one example. For me, if it's a pre-market move over like a Trump tweet like this, over about 1,500 ticks, 1,000 ticks, I'm allowed to walk away or be very, very selective on the day. So today was a great example. These only happen in terms of the pre-market moves like this. Maybe we see this a few times a year, but it's something that's worth noting and something that I've added into my rule set just to kind of keep myself in check to make sure that I'm staying in the higher probability conditions, which, as we can see, price ultimately, if we look at the 15-minute chart, probably, it's hardly moved from out of this range here, basically from there to, there. We're just kind of grinding down in a bear flag, basically. And so this candle did predict the outcome of the next session. So anyways, I hope that's helpful, and I'll catch y'all later.